Thank you. So I'm a very bad choice for the keynote for your event because the event is about the human touch in banking. And I'm going to tell you that the human touch in banking is going to vanish. There's no possibility of the human touch staying in banking. And I've got a few minutes to convince you. I'd like you to stay for the rest of the conference afterwards, if that's okay. But I'm just telling you because you're going to be very depressed at the end of the speech. So I just warn you in advance. So let's just begin with a little bit of context. So I think it's useful to think in terms of strategic focus and how strategic focus shifts over time. So for the older people in the audience, you'll remember the crash in 2008. I think that's a good place to reset our thinking. And we went through a period where we were very much focused on some of the core principles of banking. And then along came fintech, and the strategic focus shifted to fintech, and we began to think, well, the fintechs began to think, oh, they're going to rise up, they're going to overthrow the banks, they're going to say, none of this was ever going to happen, but it doesn't matter. And now fintech is just part of the landscape. Banks have partnerships with fintechs. It's, the proportion of assets under management by the incumbent main banks has actually gone up. The fintechs haven't. The fintechs have improved my banking app. My mobile banking app is fantastic. It's way better than it would have been. So the pressure from the fintechs has improved my mobile banking app. That's great. But everything that's in my mobile banking app is exactly the same as it was 25 years ago. What is it? It's a checking account, savings account, credit card, mortgage. There's nothing new. The only new account I use is my Wise multi-currency account, which my bank could have implemented 25 years ago and still hasn't. So they've only got themselves to blame. Then the strategic focus for us shifted to open banking, and we needed new strategies around that. I think that period is pretty much over now. We know what to do about open banking. We know how to make a success of it. We know that the banks need to develop alternatives to simple payment margins. They need to develop new products based on open banking. Open banking isn't going away, but it's not the strategic focus anymore. For the serious strategists in financial institutions, the focus right now is decentralized finance and tokenization, because that's going to change the financial market infrastructure. I don't mean cryptocurrency, I mean digital asset tokenization. And I think that era is going to come to an end in the 3 to 5 year strategic horizon, and then we move into the AI event horizon. And what I mean by event horizon is, like in the movies, and like the event horizon, you can see the event horizon, but you can't see past it. The magnitude of the AI revolution is so great, we can't possibly understand what business is going to look like the other side of it. So anybody that tells you they have a vision for sort of 10 years' time, that cannot be true. I don't believe anybody who says that. So we have an event horizon coming, and we can't see past that. So the question is, on the retail financial services side, what do we make our strategies now? What's a realistic strategy we can make for the things that we can plan for? And I think one response to that, and the one I'm here to talk about today, is to look at the key technologies in the space. So what I've done is I've been through a few different, it doesn't matter which one I could have chosen any one of these, like Deloitte or McKinsey, it doesn't matter. I happened to use the McKinsey one because it was easy. So I took the McKinsey strategic technology forecast from middle of this year, July. I threw out all of the rubbish about living on Mars and, genetically engineering people and all this sort of stuff, and just kept the sort of key technology things. And then I ordered them in the way that I think makes strategic sense. I've kept their timeline just to be consistent. So the most important strategic issue right now is artificial intelligence. What's coming next is digital identity. Then it's going to be spatial computing, what you think of as the metaverse. And then it's going to be quantum computing. So I'm just going to very quickly talk about those just to illustrate a few points. So the first one is artificial intelligence. In artificial intelligence, you have to understand there's a progression there. Other people are going to talk about this later on. The only point I want to make here is that we've gone from, simple chatbots, the friend chatbot kind of thing. By the way, those are huge. I was just reading a thing. In America, there was a chatbot Oh, now I'm embarrassed for some of the men in the room, but so I think it's an interesting example. So there was a chatbot where women could have a virtual boyfriend. And the service that ran this, this isn't because they're stupid. I mean, they knew the boyfriends were virtual. They just liked them better than real men. We've got to adjust to this. This is a reality, you know? No, I read a forecast. Women are going to be having more sex with robots than with men by 2030. So basically, no, don't look so depressed. You can still put up IKEA furniture, right? Okay, so he has a role, is what I'm saying there. Anyway, the point is, when they stopped this chatbot, the women were really upset about this. Because actually, people liked having friends that weren't real. It's human nature. Imagine, so if you're a woman, a real boyfriend, he doesn't listen to you. He doesn't care what you did during the day. And if you tell him 100 times, that's not how you load the dishwasher. Sorry, that's a little window into my own life. I'm sorry, but it's... But you tell him 100 times, that's not how you load the dishwasher. It doesn't matter. You can tell him 1,000 times. But when you tell your virtual boyfriend, he remembers. He's interested in what you did today and how you feel about. This is a conversation I would have with one of my business partners. My wife says to me, this is why AI is going to... So my wife will say to me, oh, you wouldn't talk to me like you talk to John, like one of the guys at work. I said, no, that's true. Because here is my conversation with John. What's wrong with the photocopier? It's fucked. Was someone coming to fix it? Yeah, but he had the wrong part. He's coming tomorrow. That's my conversation with John. He doesn't tell me how he felt about the photocopier guy. Did he make him feel comfortable or not? Did he seem trustworthy? But the AI loves all that stuff. It's no wonder women prefer virtual boyfriends. So that's already gone. That ship has sailed. Chat. Then we move on to reasoning, the expert. The virtual boyfriend who can actually tell you useful things about work as well. Well, that's a little bit of a different, right? Because we're already at the stage where the AI experts are better than the human experts at a whole range of tasks. People quite often use the example of people looking at X-rays to look for cancer and diseases and things like that. Machines, they're way better than, they can already do this better than people can. So you have the reasoning done by the machine, then you have the human expert who sits at the end and just verifies that it's all right. We're already there with that. But if you look at where the VC funding is going, the VC funding right now is going into the delegation. The point where you have agency in the AI, and the AI can take over some of the decision making. So you don't need a human in the loop. So this is the focus right now. So just put a pin in agency, because we're going to come back to that in a minute. And then we move on in the near future to where our co-workers will be AI, which, I'm quite happy with. Some of you like people. I can take them or leave them, really. I mean, you know what I mean? It's like, and also, of course, my AI co-workers would all look like Scarlett Johansson. You think I want to work sitting next to you? No, of course not. And then finally, I, for one, welcome our new robot overlords. So I'm happy to move to stage 5. But right now, we're at stage 3. What's coming next is decentralized finance, the token infrastructure, the new financial market infrastructure. Don't listen to me about this. Listen to what the IS say about it. Listen to what Larry Fink says about it. Listen to what the people who are serious about money think about this. Because they don't think about this in terms of stupid cryptocurrency memes and people buying Dogecoin and all this sort of stuff. They think of it in terms of a more efficient financial infrastructure, an infrastructure that operates without clearing and settlement. Those tokens are a very new, in the past, we haven't got time to go into this, but the point is, tokens are the future, and don't think about it as like stupid pictures of chimpanzees with sunglasses on. That's not what I mean by tokens. By tokens, I mean digital assets. I mean, securities, bonds, equities in a tokenized form. If I sell you a share in Apple, right, we have to have a broker and a dealer and a market maker and an exchange and reconciliation and delivery versus payment and error accounts and front office and middle office and back office. And if I sell you a token in Apple, end of. That's it. You're talking about an infrastructure which is 80, 90% cheaper. They're not interested in it because of ideology. They don't care about decentralization. We don't need no stinking badges. smash the state. Well, they don't care about that. It's cheaper. That's why they're going to do that. So we already know that tokenization gives us two kinds of tokens: fungible tokens that are the future of payments, non-fungible tokens like Bitcoin, which are the future of property, and we have decentralized finance protocols that allow those to exchange them. You all know this. We don't need to talk more about that. Then after that, we start moving into the era of spatial computing, the more immersive computing. I'm sure you saw Mark Zuckerberg a couple of weeks ago presenting his new glasses. The idea that we look down, like I walk down the street like you do. I don't know what I did with my phone now. Oh, what happened there? Is that time up? I walk down the street like this, looking down at my phone, the same as all of you do, like you're just doing right now. I told you. No, I told her I'm not on Tinder anymore. It's very flattering, but I had to stop. There were so many messages, I had to turn it off. I'm sorry. So I walk down the street looking down at my phone, but soon you're going to be looking through the virtual world. Is there anybody in this room that wouldn't pay? Like, for the Facebook smart glasses, they have face recognition turned off at the moment, but that's going to get turned on. So I walked into breakfast this morning, okay, and I saw people who I know, who I like, who I can't remember where I saw them last time, and I forgot what their name is or who they work for. And I'm thinking, he's a nice guy. I want to go talk to him, but I don't remember his name. If your glasses would tell you, oh, this is Emil from It's Me, and you last saw him 2 weeks ago, and here's his LinkedIn profile, who wouldn't pay? Who wouldn't pay? Take my money, please, for this. So we're going to be looking through, not looking down. Why has this gone funny? I think I pressed the wrong buttons by mistake. If you think that sounds a bit far-fetched, oh, we're going to be doing business in the metaverse. Is that funny Facebook thing with the bubble people with no legs that sucked? No. If you look at your next generation of customers, you go down into the 11 to 14 age group, those next generation of customers, the people that in 5 years' time are going to be opening bank accounts, buying travel insurance, renting a property for the first time. If you look in that age group, those people aren't on YouTube or TikTok, thank God. Those people are in Roblox, Minecraft, Fortnite. That's where they interact. That's where they meet other people. That's where they will expect to do business in the future. To you, it sounds stupid things about games. It's not. That's where we're going. You're going to put on the glasses. You're going to be in the mixed, alternative, virtual realities, and that's where you're going to expect to do business. Then finally, the last thing on that timeline is Y2Q. That's Y2Q is when quantum computing becomes a reality. So quantum computing, you all know this. Quantum computing, you know how ordinary computers work? Anyone? It's not a technical audience. Did I misunderstand? Okay, you know how ordinary computers work. They work with ones and zeros, right? And you know how quantum computers work? That's very different. Quantum computers work with, there's like a cat in a box that you can't see or something, or it's the two cats in a box, and when you open it, yeah, it's something, I don't really understand it. But the point is, when you have quantum computers, you can solve problems that you can't solve with regular computers. And unfortunately for us, one of those problems is our encryption systems. So at some point, now there's a good and a bad to that. The good thing is, when somebody gets a working quantum computer, they can steal all the Bitcoins. That's a good thing. Then we'll never have to listen to those Bitcoin people ever again. The Bitcoins will be gone, we can stop thinking about it. But the other thing is, I'm serious, just in the Satoshi wallet alone, there's about $15 billion right now. The first person to get a quantum computer gets all $15 billion. I mean, that makes it worth doing, right? So if you're thinking about a startup, that's the kind of thing I would be thinking about. So those are the 4 trends. Now let's go back and look into artificial intelligence a little bit more. We're making this shift to agency. Not just to bots, but to networks of bots that can interact with each other, that can become goal-directed, that can solve problems. Like, we don't have to tell them how to solve the problem. We tell them what the problem is, and they get together and work on the problem. And those agents, because they are able to make because they're able to make decisions, one of the things that they'll make decisions about is, of course, financial services. So let's see what that means for financial services. It's been obvious for a long time that AI is going to have a big role in financial services, and there are lots of reports you can read about this. This happens to be quite a good one. It's from the Alan Turing Institute. I'm not saying it just out of patriotism. It's a good report. That's the Alan Turing Institute in London. But there are lots of reports you could read about this kind of thing. And what do those reports say? They say something like this. This is John Cryan, who used to be the head of Deutsche Bank. And this is John Cryan. And he said, right now we employ people to behave like robots, but in the future we'll employ robots to behave like people. And that, generally speaking, was the view of banking, right? So we're going to get rid of the people, we're going to replace them with robots, and everything's going to be much more efficient and work better, which is probably true. And if you look at last week, this is from last week, this is the US Banking Administration Institute. I just looked at their latest report about AI in banking, and this is some of the examples they're giving, right? So they're saying, we can take the most transformational, the most amazing, the most astonishing technology that any of us will ever see in our lifetimes. AI, there's no doubt about it. This is the most transformational technology any of us will ever have to deal with in our working lives. We can take this fantastic, new, amazing technology, and if we deploy it correctly within our organization, we can slightly reduce the number of people in the call center. Fantastic! I can't wait for that. What a breakthrough. We'll have a call center, but have slightly fewer people in it, though. That's, honestly, this is how banks think, right? If we take the incredible power of agents that can make decisions and think for themselves and network together, and if we give them our data, and if we empower them, and if we allow this technology to go crazy in our organization, we can make slightly better cross-selling opportunities in a few places if we really focus, You don't seem so excited, Valentin. I mean, I thought, come on, you can make slightly better cross-selling opportunities. You should be jumping up and down. Fantastic. Thank you. This is what they do in banks. Come on. That can't possibly be true. That's what AI is going to do to banking? Come. Let's look at some actual figures. Klarna is a good example of an organization that's gone all in on AI. They're always in the newspapers talking about how they use AI for everything and how they've reduced the number of people in their call center. See, it was true. That was really going to happen. Let's look at the third quarter figures. And what do we see? We see, actually, it is true. The overall expenses for customer services, which is where they've spent a lot of the money on the chatbots and things, has gone down 14, 15%. Sales and marketing expenditure has gone down almost 20%, and they've still had a net revenue increase of 1/4. So it looks as if the AI is actually working. But in order to achieve that, the cost of IT has gone up 25% because you have to spend a lot more money on AI, and AI experts are much more expensive than people that work in the call center, thank God, So what you see is an overall fall of 2% in overall expenses. And it's, Has it changed anything in Klarna's business, this incredible expenditure? Did Klarna do anything different than they did before? No, they don't. And those numbers are all quite small compared to the cost of funding, which has gone up 2/3, and the cost of charge-offs and defaults, which has gone up by almost 1/2. So does spending that money on IT does that transform the organization? It doesn't look like that to me. I mean, maybe it looks different for you inside the banks, but to me. When we try and have a kind of more futuristic view, I think this is McKinsey as well. So this is McKinsey's futuristic view. I mean, there's nobody from McKinsey here, is there? Or I don't want to. I'm not picking on them. It's just I happen to have their report in front of me, So McKinsey's futuristic view of retail banking, I think this is fantastic. We're going to take this amazing new technology, and in the branch, we're going to have a robot. Really? You honestly think they're going to put robots in the branches? Do you want to go to a bank branch? No, I don't want to go to a bank branch for any. you put a robot in the bank branch. I'm going to go to the bank branch because there's a robot in it? No. I don't want to go to a bank branch now. I want to go to a bank branch even less if there's a robot in it. I mean, unless it's to see robots fight or something, or, you know what I mean? But just to like go and see that's mad, a robot green. No one wants to go to a branch. I don't even want to phone the bank, you know? The idea that I want to go to a branch because you put a robot in it, I mean, maybe not in Romania. What's actually going to happen is much more interesting and much more revolutionary. Because the real revolution in retail financial services isn't banks getting AI, it's customers getting AI. It's customers getting AI, which is going to change this business completely. And there's nothing you can do to stop it, because big tech is handing out the AI like candy. All of your customers are going to have AI at their fingertips, and you have no strategy for what happens when your customers become 1,000 times smarter in 5 minutes. You have no strategy for that. And I'll give you an example as to why I'm right. So when it comes to, let's look at payments as a sub. When it comes to decisions about payments, there are broadly kind of two kinds of decisions I have to make as a person. There's a decision like, oh, I need to remember to pay for the car parking at this train station. Should I use my Amex or should I use my John Lewis card? My Amex is literally the most expensive way to pay for anything on earth. And the car park people are stupid, so they let me pay. And I get 3% cash back. And people who pay with their debit card are giving me free money, which is great. And I'll use it for air miles and all this sort of thing. Or should I pay with my John Lewis MasterCard because I get 1% cash back on my John Lewis MasterCard? Or should I pay with my Wise? See, you're bored already. I'm just talking about it, I'm not even thinking about it, and you're already bored. Imagine how boring it is to actually have to think about that stuff. This is exactly the sort of stuff that a bot should be doing for. Like, why would I? It's against my human rights. Why should I have to think about that? It should be a bot doing that for me. And the most trivial, simple, easy bot can make a better decision about that than I can, than anyone in this room can. Now think about the more complicated decisions. So now this is me thinking, in the UK, we have a special kind of savings account, a tax-efficient savings account for pensions and for old people, basically. And so here's me deciding which of these accounts I should put my money in. I have to do this every year. Which of these accounts I should put my money in? Should I put it in this one, but I can only withdraw it twice a year? Or I put it in this one, but I have to take my grandmother with me, and I don't have a grandmother anymore, so I can't use that account. But what about the account where I go on Wednesdays? If I go on Wednesdays, Citi give me 1.2%. Maybe I should think about, but is Wednesday the right day for me to go? I don't know. Pensions, for middle-class people like us, pensions are the most important decision any of us ever make financially. And yet I haven't got a clue what to do. This is me talking to my pension advisor, Keith, a very nice guy. Okay? So we just had the finance minister just made a new budget in the UK. So my finance advisor says, well, we have to have a little discussion about, okay, so we'll have a discussion about the implications of the changes that the finance minister has made for my investments and savings. So let's have a discussion about that. So my financial advisor says, well, because the reverse taper on the inverse flip has gone to doodle, you have to Swanee the widgets and shift. I have no idea what he's talking about. He might as well be talking Mandarin Chinese. I'm an intelligent person, and I have no clue what he's talking about. It's impossible for me to understand. You think a bot couldn't make a better decision about that than me? You're joking. Absolutely joking. For 99% of the population, I would say for everybody in this room, except for Norman, a simple bot could make a better decision. Norman has some complex issues. Is my butler's dry cleaning tax deductible? That sort of thing. But for most of us, this never happens. So a simple bot can take care of all of those kind of things. What makes you think that any normal person wants to interact with retail financial services in any way, you're looking at a world where customers have robots, not just for boyfriends, but as a... I'm sorry, I couldn't resist a joke, I apologize. But he's a good-looking guy, isn't he? You know. So you're looking at... By the way, does anybody in the room... I'm just curious, because I'm very proud of my followers on LinkedIn. And my followers on LinkedIn are profound nerds about payments, and I'm so grateful to them for all that. I posted this picture on LinkedIn, and within 2 minutes, somebody had posted... Can you see what the mistake in that picture is? Anyone see what the mistake in the picture is? You're not nerdy enough. The thing is, I posted that picture on LinkedIn, and within 2 minutes, somebody had replied to me and said, that's not a robot. It's not. It's a space marine. It's a blood angel space marine. And they're augmented humans. They're not robots. So actually, it's a guy thing. Don't worry about it. It bothers guys. You wouldn't pay any attention, but it's a guy thing. He's a blood angel space marine. He's an augmented human. He's not a robot. That bothers some people. And I'm embarrassed I posted it now. So we'll move on from that. So given that banking is boring, and no normal person would want to talk to their bank ever about anything when a robot can do it for them, you have a really interesting problem coming up, which is how are you going to sell financial services to those bots? Because I can tell you right now, my blood angel space marine, he doesn't care that you sponsor Formula One. He doesn't care. He doesn't care that you sponsor the rugby matches. He doesn't care about the colors of your logo. That's how you choose, right? It's like, yeah, of course. You want one that looks nice. He doesn't care about your stupid adverts on television. I went to a focus group in London, one of the banks in London. I went to a focus, it was interesting, I never went to a focus group before. I went to a focus group for 16-year-olds, and they were trying to understand which television adverts for financial services had the most impact. So they asked these kids, you know, which adverts do you remember for banks? And their kids had no idea what they were talking about. None of these kids watch television. They all watch Netflix and YouTube, and they have no idea what a bank advert looks like. Banks mean nothing to them. The brands are, you know, when they get their Nike account, they don't care which bank is sitting behind that. They don't care which bank is the funding source. Do you think anybody in America who has an Apple card cares that it's Goldman Sachs sitting behind that? They don't care if it's Goldman Sachs or Citibank or anything else. They don't care. Bank brands have no... So what are you going to sell? Why would my bot choose your bank? I don't know. I don't know. API response times? Richness of data in the APIs? Service uptime? Those are things that are important to bots, not the stupid Formula One car. What are bots like? Bots like uptime. Bots like response times. Bots like rich data. They don't care about any of this other stuff. Oh, I want to say one more thing about this. Okay, because I'm looking at some blank faces in the audience. So you think I'm exaggerating. Okay, let me just explain to you what the existential threat is. I don't know the figures for Romania, so I'll use the figures from the US. In the US, at a time when interest rates were 0, only 1 in 20 people with a car loan refinanced their car loan. So on average, every person with a car loan gave a charitable donation of approximately $3,500 to the banking industry. And I would probably have been one of them. Because to change it, I've got to go and look at all the different loans and work out, and then I've got to open an account, then I've got to transfer the money over, then I've got to sign some things, and then I've got to hold up my passport and show my face and all this kind of stuff. And I've got other things to do. But bots don't. Bots don't have other things to do. A bot can do that 100 times a day. So that net interest margin of $3,500 doesn't go to $3,000 or $2,500 or $2,000. it goes to zero. And it's not redistributed inside the financial sector. It goes into general consumption. You're looking at a world in which net interest margins are going to be zero. And I don't believe any of you have adjusted to what that means in strategic terms. That means you've got to think of other things to sell. That means you've got to think of work to do. That means you've got to think of things you can charge people for, because you can't just sit and rely on their interest margin. My bot's not going to allow that. My bot is going to go in. If everybody in this room, we could do it as an experiment if it wasn't so boring, but we could get everybody in this room to log into their savings account right now, and I guarantee you the person sitting next to you could find a savings account that will pay you more. I guarantee you that. That's true for everybody in this room. It's true for me as well. But you'll never do it because it's boring. But bots will do it. They don't care. And the good news is, because of open banking and PSD3 and APIs and PISPs, bots can do all of this. No problem. Which means there's one interesting aspect of this where banks should have a strategy, and you're going to hear about it a bit later on. Because if bots are going to do this, that means bots need to be part of the digital identity infrastructure. Because you need to know which bot it is that's accessing my account, and you need to know that I gave the bot permission to do that. And that's easy to draw on a whiteboard, right, or at McKinsey. You just draw a cloud and say, oh, bot access. But you drop down one level. You go and ask my friends from It's Me. You drop down one level. And now you're talking about who holds the keys, who holds the certificates, how long are the certificates valid for, what's the trust architecture, which TTPs are allowed to issue these. None of this stuff exists, not even in the European Digital Identity Wallet, which doesn't exist either, but you get my general point. So, in summary, if you want a virtual boyfriend, I'm just saying it could happen. If you want, I just want to let you know you don't have to wait, because Dave GPT is already live. So if you wake up in the middle of the night and you're just thinking, like, what would Dave think about this kind of, I'm there for you 24/7, 365. Dave GPT is already live. Just wanted to let you know that. So thanks very much for listening. I hope I haven't depressed you too much. See you later.
Awesome. Guys, that was David Birch.